Today we're going to discuss the impact of Trump's tariffs with Kevin Kidney, our head of investments. So we normally do in our morning markets a update of what's coming in the week ahead, but what we've seen over the weekend is US President Donald Trump announce a series of tariffs on certain countries. So I'm here with Kevin Kidney. Kevin is our head of investments here at True Potential, and Kevin's going to help us go through what has happened over the weekend. So Kevin, I guess the first place to start with is what's happening.
Good morning, Matt. So we've had surprise tariffs across Mexico, Canada and China announced shortly after 6 o'clock on Friday evening. A big surprise for markets because the US stock market looked likely to close the month of January at an all-time high and match the all-time highs we'd had in Germany, Italy and in the UK for the month of January. So the tariffs were 25% unilaterally on Mexico and Canadian imports. Some slight adjustment for energy imports from Canada because Canada sends a lot of oil to the US, but an additional 10% as well on Chinese imports into the US. So if we were to take those percentages and convert into dollar amounts, that would affect roughly $1.3 trillion worth of goods annually. And that in total is equivalent to about 43% of the goods that the US imports every year. So it's a material shock for markets and a material surprise for us. The one issue, of course, is Canadian politics, where Justin Trudeau right now is just a caretaker Prime Minister. One of the candidates to replace him has indicated that she would likely do more focused tariffs on areas sensitive to Donald Trump, such as Tesla's, of course, with his relationship with Elon Musk. So what we're seeing set for escalation here in this tariffs dispute.
And I guess the next obvious question to ask Kevin is he likely to go after any other countries? Because as you mentioned, at the minute it's just Mexico, Canada and China. Is there anyone else likely to get pulled in?
The answer appears to be yes, just based on an offhand remark from Trump yesterday evening, which is his main ire is with the EU.
Yeah.
That would be collectively material as well, so around about $500 billion worth of goods each year are transported from the EU to the US. And the most important thing for the EU is that the United States is the EU's largest investment market. So about 55% of capital which flows into the EU comes from the US. So if Trump chooses to widen the tariff net and include the EU, then it would be a material shock. And that's why one of the main underperformers this morning in markets would be European autos. So names such as Daimler, who make Mercedes, are all down over 5%.
Yeah. Thanks, Kevin. And I guess linked to market impact is what can we expect for economic impact for the US?
So at the start of the month, we always get economic surveys globally.
Yeah.
We'll see the US manufacturing survey for the month of February this afternoon. They're all redundant.
Yeah.
Effectively, if these tariffs persist even through this month, we would expect a material turn in manufacturing and services sentiment to feed into the surveys from March. So most of the data we're going to see in the next couple of weeks is largely irrelevant because it's survey-based. We'll, of course, still have jobs data this week, which does matter, but we know the US was growing quite healthily. And then, of course, we have inflation data, which picks up in the middle of the month. So the main worries now are going to be that inflation is going to pick up. If the tariffs do come through and persist for the full year, it's likely to add 1 percentage point to US core inflation. US core inflation is close to 3% today. So that would really challenge the rate cuts that the Federal Reserve in particular would wish to push through the market. And we know that it would also be a growth shock. So it's likely to reduce US GDP by 1 percentage point as well. And that's what we see in the bond market today. The bond market is trying to price an inflationary impact in the short run and then a growth shock in the long run. So bond yields haven't really changed that much. Normally we'd expect bond yields to fall considerably on a shock such as this, but really it's mostly in the equity market.
And it's just due to those inflationary pressures that you're talking about.
The one thing is the equity market is pricing in a form of growth shock. So the US S&P 500 as of this morning was down about 1.25 percentage points, which isn't too bad. That takes us back just to earlier last week. The UK was down just over 1%. Unusually, the main market affected overnight was Japan, which is down 2%. And of course, that's the one country Trump hasn't referenced at all in his tariff hysteria. So that just perhaps reflects that Japan also has a large auto export industry as well as a large tech industry. And again, we're seeing big impacts in the FX market. So sterling is down 0.75 of a percentage point, but it's mainly the euro which is impacted, which is down over 1.25%. So markets are down. So it's, currencies are weaker versus the dollar. Equity markets are down. Bonds aren't doing much. We know gold's down a little bit. Oil is up. And that's really just because markets are pricing some of the bad news quickly, but are expecting the story to evolve quite quick.
So I think the key point that you've brought out there, Kevin, is despite actually the announcements that have been made, it impacts a large amount of goods. The market reaction's been quite benign, actually.
I think so, yes, because we're only back to where we were in the middle of last week in terms of the stock market, and bonds haven't sold off, so bonds aren't giving price drawdowns. I think markets think that cooler heads will prevail, but it may not be this week. It may take several weeks for there to be some sort of crystallization of what's required for Donald Trump to step back.
So thanks for that, Kevin. I think that's all we've got to say for today. Please join us for the rest of the week where we bring US activity data, Bank of England and continued US earnings numbers. Thank you very much.
This video is not a recommendation or personal financial advice. With investing, your capital is at risk. Investments can fluctuate in value and you may get back less than you invest.